Hello, traders. This is Michael coming to you from GammaEdge on Thursday, March 20th with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. We're currently looking at our market trend model. This is an overview of buying and selling and occurring in the market instantaneously with our bolded CT, as well as our moving averages and colored ribbon. The filtered cumulative tick that is outlined in green here allows us to see large buying and selling orders within the overall market. These are most likely institutions that are transacting orders. At the end of the day yesterday, we did see an improvement in the filtered cumulative tick, so larger orders were being transacted above the zero line, which means there was more buying than selling. It was still a anemic look at the end of the day on the bounce there, with the overall price action ramping up. Instantaneous CT, we did see it start moving from lower left to upper right, so buyers were outpacing sellers into the close, but not a significant amount. So we're going to watch this intraday today to see if we do see a continuation of buyers being in control of the market via the filtered cumulative tick, the larger transaction orders, as well as the instantaneous CT and the moving averages here. Our overall longer term look for the buying versus selling, we do still see a bearish state as the red is below the cyan. So we're into this colored ribbon now with our instantaneous CT. This is historically an area where we do see some consolidation and choppiness unless we emerge above the colored ribbon, and then we would look for a longer term move to the upside. The breadth indicator up here, new lows versus new highs, into the day basically at parity with the new lows versus new highs. So we do want to see that improve significantly. So obviously you want to see more stocks outpacing new highs, outpacing new lows if you're bullish. And then conversely, if you're bearish, you would want to see the other side. We've had multiple days of the new lows significantly outpacing new highs as you've seen price depreciation. So if that needs to turn around, obviously we want to see that move to the upside. Moving on to our SPX PM settled, all expiries turned on. This is obviously our shorter term look of the overall market sentiment and structure, as this includes 0 DTE as well as weekly expiries. We've outlined our transitions, our GEX and DEX transition boxes here with the white and cyan. They are in confluence today at 56.80 and 57.20. If you're bullish, we need to see us move above the transition levels and moving above 57.30. If you're bearish, you'd want to see us stay below the transition levels, staying more into a put dominated environment. We are seeing a repair of the left-hand plane, which is the structure below spot price. It is repairing slowly. We are exposing some more in the money calls as noted by the green net delta here, but we do have significant in the money puts above us, noted by the red net delta here. These will continue to be an overhead ceiling and weight for price appreciation and may keep it from moving overhead. We've noted the IC that is in today. That has been put on by a trader most likely, and the legs here. So we're anticipating that price would most likely stay between those IC legs, but if we do see a violation, there may also be an opportunity for a trade for us in today. Projected open is around 56.50. We note that as a large negative put dominated level. If we're below that, again, that we would lean more towards a bearish state. If we're above that and then moving up into transitions and through transitions, we would move to a more bullish look and sentiment. We are put dominated coming into the day, so that obviously is a bearish look coming into the day, at least on the all expiries. GEX ratio down here, this is basically a better put call ratio as we introduce time via gamma. We are still put dominated, as you can see, with the GEX ratio below 1. So that means the put gamma is larger than the call gamma at this time, even with the price appreciation improvement yesterday. So if you're bullish, you would need to see this improve and start moving up towards the 1 level. If you're bearish, you'd want to see this stay below 1 and moving down towards below 0.6 and into 0.4, which means the put gamma is increasing and the call and the put speculators are opening positions anticipating lower movement in price. We're moving on to the SPXP. 0 DT expiry here. We are call dominated, so we did see a significant improvement again in the left-hand plane, which is below spot price. This can be a supportive type force if these in-the-money calls continue to remain below spot price, and we do not see those change to out of the money. Projected open is again 56.50. We note that's an important level on all expiries. Transitions are outlined here, 56.65 and 5700. If you're bullish, you want to see us move above 5700 and start targeting those 57.25, 57.30 IC strikes. And then above that, we'd be looking for 57.50. Drunken sailor range outlined here with the yellow box. Within this overall, we can have increased choppiness and increased volatility, as well as within the overall narrow transitions. If you're bearish, you'd want to see us open around 56.50, retest the bottom of transition and failure, and then start moving back down towards 56.50 and below, and that would give you an opportunity to move down towards 56.15 and 56.20. We've noted the net charm here today. If these out of the money puts stay out of the money, these will continue to be supportive as they grow throughout the day if spot price stays above it. If we do retake this 56.20 to the downside, then this can become bearish as an overhead, and then we can continue to move down towards that 5600 level. We denote the delta balance chart here, and we've forced spot price, which means we've forced the price for the projected open, and then you see the corresponding changes within the overall Greeks and structure. This will be pushed out to production hopefully within this weekend, so it'll be available to all of our members. But this allows us obviously to, if there's a large gap down or a large gap up, to force price and then get an overview of what is going to look like for the day. Again, delta balance, if you'd want to be bearish, you'd want to see this left-hand plane, right-hand plane, as well as the overall delta balance start moving above zero. That would indicate that call speculators are coming into the complex and structure and then overriding the put speculators. We do not see that currently projected out in time into next week. So we do maintain a cautious stance for the overall SPX 0DT for today and then on out in time also. Again, if you're bearish, you'd want to see all of this stay below zero or around zero. Obviously, that would indicate that put speculators are maintaining control and then obviously increasing their exposure to the downside with out of the money put speculation. Moving on to our thesis for today, or our game plan. I've outlined the table here from our SPX game plan in the morning, where we'll be long versus short, outline the drunken sailor range, 0DT GEX, and DEX transition. So again, thesis for today is long above 57.30 to the upside, targets 57.65. Obviously, that's the top of the drunken sailor range, and we've indicated that within the overall expiries. Short 57.20, 57.30 for the target 5700. Obviously, that's the top of the drunken sailor range. If we see a rejection there, we'd look for a move down towards this 0DT top of GEX and DEX transition. Short 56.65, this would be a projected open below the transitions at 56.50, a move up towards the bottom of transition with a rejection, move down towards 56.50, and then obviously that's a put dominated strike we've already discussed, negative GEX on the full complex. Below that, we'd enter a more put dominated state and most likely move down towards 56.25, 56.30, and the bottom of drunken sailor range. We've discussed 56.40 short, 56.50 area. Obviously below that, we're in a put dominated negative gamma environment, so that would be difficult for price appreciation. Long 56.15, 56.20. This is the bottom of the drunken sailor range, corresponds with those lower IC strikes. This may be a little bit cautionary long from here. We don't anticipate this to be violated, but that would be a small long to the upside. Could be just an area where we see some choppiness and some sweep orders that we've discussed multiple times. So it could go above and below that multiple times until we see some sort of resolution of price or basing of price. And then we have a short 56.15 to 56.20. That's obviously the bottom of the drunken sailor range and those lower IC strikes. And then again, if we get down below there, we would anticipate there's significant out of the money put speculation and the overall structure has deteriorated, as well as the MTM. We will be watching our vol-m command intraday. That's basically indicating market participants and where they're transacting the highest volume. If you are a bull, you'd want to see the call and put centroids with a positive slope. If you're bearish, obviously you'd want to see the call and put centroids with a negative slope. So we'll be patient at the open, let the opening range clear, let the books clear, and then we'll be able to get some volume command around 10 o'clock with some data that will give us a little bit more clarity on direction. So again, just a quick overview. If we open below transition, we'd be most likely a little bit more bearish. If within transition, it's going to be extremely choppy. Above transition, we'd be a little bit more bullish for a move up towards the top of DS. Understanding that we're contained within the overall drunken sailor range. So again, smaller plays, shorter time frames, unless we break one edge decisively to the upside or to the downside. So, all right, everybody, thanks. Let's make it a great day, and we'll be in the Discord in a few minutes.